Great. Hi, everyone. Thanks for joining our discussion today. What we're going to be discussing, what we're going to start running through is our cost to clarity. This presentation is really going to be focused in multiple parts. So David and myself are going to run you through our various sections. My name is Andrew Lafurla. My co-presenter is David Paps. But a little bit about me before we get stuck into the actual presentations. My name is Andrew Lafurla. I'm the Product and Practice Director for Profitability and Cost Management here at Alithia. Been in the industry about 15 years. I started my career out in actually South Africa and then moved up to the UK, then moved over to the US. So I've had some really, really fortunate experiences, or been fortunate enough to have a lot of experience implementing across the globe with a lot of our different clients in Oracle profitability and cost management. Profitability and cost management has been my focus area throughout the 15 years that I've been focused within the Oracle EPM world. It's something I'm passionate about. It's something that I really enjoy doing. And fortunate enough, I have been recognized as an Oracle Ace Pro in that industry as well. Just some other kind of fun facts apart from that, I do enjoy knife making. It's something I enjoy over the weekend, making something tangible with in that world. It's something I enjoy. And I am based out of Boston, Massachusetts. If you do need to get hold of me, you'll see my email there at the bottom. You can also reach out to me on my blog site, which is lafurla-epm.com.
Welcome to our webinar. My name is David Pabst. I'm a Senior Director here at Alithia. I run our EPM Solution Architecture team, so I get to work with a lot of different organizations on how you should deploy the different components within the Oracle Cloud Enterprise Performance Management stack. I started my career building financial systems for a number of companies in the Boston area. I've always had a passion for technology and bringing technology and finance together. During COVID, my fun fact is I actually wrote a book during COVID after my kids would go to sleep at night. I said, hey, I speak to a lot of different CFOs and VPs of FP&A on how should you be attacking budgeting and forecasting in your organization. I said, I got to codify my laws of budgeting and forecasting, and wrote a easy read that you can find on Amazon and Barnes & Noble that takes you through a guided set of steps on how to deploy a modern budgeting and forecasting process within your organization. My contact information, you can get me at david.paps@alithia.com or find me on LinkedIn. So we're really proud to work for Alithia. We're based in Montreal. We have over 4,000 employees. We are a consulting company that does everything from business strategy to technical architecture, but we actually work in the Oracle Alithia, the Oracle practice within Alithia, and we're really lucky to have 450 peers, mainly based in the United States, Canada, Morocco, and India. We're home to a large number of Oracle Aces, of which Andrew and I are two of them. And what we do in our Oracle practice, we really try to be the best of the best of implementing Oracle business applications. So that's Oracle Fusion ERP, Fusion HCM, Fusion CX, and what is close to me and Andrew's heart, Oracle Enterprise Performance Management. Our presentation today is really about two of the components within Oracle's performance management stack. Is really how Oracle Cloud Enterprise Performance Management Planning and the Enterprise Performance Management Profitability and Cost Management applications really work hand in hand to deploy a modern capability within the CFO organization. So as we drill through into our presentation, cover in this 4-part webinar, what clients are always asking us where we should go with EPM. We're going to talk a little bit about the paradigms in design architectures we see with planning. We're going to do the same with profitability, and then Andrew and I are going to pull it all together. So in the first part of 4 of our webinar, we're going to ask ourselves, where should we all be going with EPM? Andrew and I are asked all the time, how should you go about rolling out EPM? And when you subscribe to EPM, there's a lot of different modules and a lot of different components, and sort of, what I like to say is, you don't want to, Rome was never built in a day. And while you get access to all these great capabilities, it's deploying them in a way that your organization can consume effectively and really adopt and use to drive your business. So we like to ask, do you know how many times a day we get asked how you should roll out EPM? And the answer is a ton. And really, Andrew and I both get the opportunity to work with prospects and clients on putting together a phased roadmap to adopt different use cases to make the finance and accounting functions much more efficient within different organizations. And what we've come to realize is the architecture and the roadmap looks very similar organization to organization, and certainly they get tailored. So with that, we can actually show you companies a little bit different, but when we look at different organizations, we'll see a business process and use case flow that looks very similar to this. So you might see, really at the center of the CFO and FP&A organization, a planning capability, a long-range planning capability. Andrew's going to take you through some of the use cases around BU and segment allocations. As we go to the next level of detail within an organization, many organizations have their highest cost around labor, and so how do they go about thinking about fixed labor, variable labor, the demand and balancing supply and demand around labor, planning different parts of high spend SG&A, and then drilling down deeper and deeper within your organization around margin, products, services, the different things that you sell and make. Once you sort of have your core traditional P&L, balance sheet, and cash flows from a company level, the next question people ask is, okay, I want to drill down and start planning and looking at my business from an operational perspective, whether that's actually planning, how we sell and consume services within our organization, or even driving down and getting an understanding of the profitability of our products, our customers, and so on. And so to take it up a level, this is what we see in a lot of different organizations. We're going to drill into each piece of this in today's webinar. So standard FP&A use cases we often see from sort of a budgeting and forecasting, and I see these at different organizations. And again, you have to start at the beginning, right? And so what we'll see is people usually have a problem area that they need help. Maybe they're doing something in spreadsheets today, and they say, help us fix one of these. And that's a lot of the times the entry point that we start working with a prospect. So as I said, core planning, long range planning, looking at your labor forecasting and variable forecasting. Depending on the type of organization you are, you wouldn't think that SG&A is a big place where people might put whole applications in place to help manage. But in some organizations, some consumer organizations might spend billions of dollars a year in marketing dollars. And with that comes the need to manage all the different campaigns and vendors and contracts and things that go around that. So a lot of times we'll see in different organizations, maybe IT spend or technology spend is very high, marketing, or even if you're capital intensive and you're building campuses and factories and manufacturing, maybe capital expenditures are important. And then being able to drill deeper and deeper into the organization with things like margin planning, or even getting down into the daily sort of reporting so that you can operationally manage your business with things like daily flash reporting. So that's really where Oracle Cloud EPM comes into play. Andrew, do you want to talk a little bit about how profitability comes into play?
So with profitability and cost management, obviously Oracle Cloud EPM, enterprise profitability and cost management specifically, a lot of our clients will automatically think, oh, it's just for profitability analytics. And that's not really true. Profitability analytics is, of course, a big part of profitability and cost management, but it's not all that we can do. Of course, we can do your segment or BU profitability. We can do your more operational based profitability on product or customer segments or customer profitability. But of course, we can also do things like driving standard cost rates. We can do shared service costing. We can do intercompany billing and operational transfer pricing. We can do expense allocations. We can do your fully allocated P&L allocations as well. So there's a lot in profitability and cost management that we can utilize in order to really solve for your allocation solutions as a whole, not just for profitability analytics. And similar to what Dave was saying on the Oracle planning side, a lot of the time clients will come to us with a specific need. I want to do fully allocated P&Ls down to a segment or a BU level, or I want to do operational profitability down to a SKU level perspective. And that's the starting point for us a lot of the time. But obviously, over the time, companies' needs change. They start utilizing the tool and they want to start branching out for additional use cases within EPCM as well. And that's certainly a great way to go about it. You start with one that you're servicing a specific pain point, and then you're starting to branch out from there. And certainly with the Oracle Enterprise licensing, you are able to do that. You're able to deploy as many of these applications as you need to in order to service your business in a way that is meaningful. And what we'll see as we go forward, PCM can and does interact incredibly well with the other EPM modules. And we're going to dive into, obviously, today how it interacts quite well with your planning module, but PCM can connect to really any of your actual data sources as well as your planning data sources.
Thank you, Andrew. So if we bring it back to where we started, right? It's really the handshake between profitability and planning enable FP&A to solve these different use cases using Oracle EPM Cloud. So certainly we start with the corporate view. A lot of times our clients will, or these projects are sponsored by the CFO and say, hey, I need to improve how we're doing corporate planning or corporate reporting or corporate profitability reporting. Now, what's interesting as we move farther and farther out, the number of users, the granularity, the importance to the organization increases. And so you might have heard the term connected planning or XFP&A. That's what we're really talking about here, which is connecting the different functions within your organization, whether that's your different gross margin functions, your different SG&A functions, all the way down into different operations within your organization. And what's interesting as you expand, right, the level of detail that increases, right? We start to get into things like customers and suppliers and projects and vendors, but also the number of users that are adopting the platform increases, as well as the frequency at which people have to interact with it, right? When you get into sort of operational planning of, hey, what did we sell yesterday, or what are we making tomorrow? That's a daily or weekly kind of function within the platform. And ultimately, this is the nirvana to if you can deploy connected planning within your organization, it's really to have everyone working from one common playbook where different groups or functions within the organization can collaborate. And you get rid of just that noise within the organization of spreadsheets, emails, things, I thought I updated it and I didn't tell another group. And getting into a platform like this, really allows everyone to collaborate from the same sheet of music. This into practice, and just made up sort of product centric company, everyone's going to have a P&L, but how you look at it within the organization really gets deeper and deeper. And the combination of Oracle planning and solving different use cases that help different parts of the organization, corporate certainly is going to have a company P&L. As Andrew said, certainly have a need to drive, certain corporate costs down into the company P&L, maybe allocating some SG&A, facility costs, those kinds of things. But then as you get deeper and deeper into the different business units and segments within the organization, each of the leaders of a different business unit are going to want to be accountable and held to their own P&L. And then as we drive costs deeper and deeper, you might hear of things like waterfall allocations or tiered allocations where we're taking corporate costs and we're taking divisional costs, and then we're taking costs deeper and deeper to the organization. And finally, we want to drive those costs and come up with a P&L that allows us to look at, hey, what's the performance of a customer or a product, or the actual things we sell or the people we sell to. Thank you for attending part 1 of our webinar on From Cost to Clarity. And we hope you enjoyed it. If you have any questions, please reach out to infosolutions@alithia.com. Welcome to part 2 of 4 of our From Cost to Clarity presentation. In part 1, we covered where do we go with EPM, which looks at the combination of using Oracle Cloud Enterprise Planning in conjunction with Oracle Cloud Enterprise Profitability and Cost Management to deploy modern planning and accountability within your organization. In part 2, we're going to drill into some of the planning use cases, and let's get into it. In part 1, we talked about all the different things you could do with the typical use cases and the typical architectures we see, trying to solve these use cases. Common planning use cases, again, are being able to plan, at a consolidated level within the organization. So being able to roll up your plan actuals, budgets, and forecasts from across the organization into a company-wide P&L and hold people accountable. We talked another area is long-range planning. And then for every organization, labor is usually one of the highest costs. And so we'll talk a little bit about fixed labor versus variable labor planning, depending on your organization, different types of SG&A expense planning. In part one, we talked a little bit about how some organizations, especially consumer-facing ones, they might spend billions of dollars on marketing, as an example. And when marketing is a key element of your business, people will actually put planning and budgeting tools in place to help automate, streamline, and govern that spend. And then we'll talk a little bit about, getting deeper in the organization and ultimately, if you can plan your expenses and consolidate your actuals, budgets, and forecasts, ultimately you'll want to get deeper and deeper in the organization into the parts that make up your gross margin. And so starting to look at, what are our volumes, what are our rates, how do we intend to deliver on our budgets and forecasts, and actually get into the products and services that we sell within our organization. Oracle Cloud EPM makes deploying some of these capabilities quite easy. I always like to talk about when you subscribe to Oracle EPM Cloud, there's a number of pre-built modules that are included as part of the subscription. So the first off is there's a financials module. So that allows you to quickly deploy a full set of integrated financial statements, P&L, balance sheet, and cash flow. So you can do driver-based, trend-based, direct entry, different styles of planning. There's a pre-built workforce module. There's a pre-built CapEx module, pre-built projects module. So if you want to look at, hey, different types of projects within your organization, whether they are revenue producing, if they're internal initiatives like deploying training to different parts of your organization, or even CapEx investments, you can actually model the spend and the ROI around those investments using the projects module. But sometimes these modules, while these are great quick starts to get people going, the technology also allows us to deploy bespoke planning capabilities for different functions within the organization, whether that's IT or marketing or your BUs, which we've talked about. So for core planning, every organization starts with a core planning app. So when we come in and you say, hey, how do we put these tools together? Well, I can tell you, 9 times out of 10, we are going to start with sort of the center of the circle, which is going to be an application that allows FP&A to build their budgets and forecasts, as well as handle the variance explanation process within your organization. And so really, I like to say when we build these applications, anyone can build you a P&L, budget, balance sheet, or cash flow application, but really it's really the combination of making sure that you have a great methodology to make planning easy for people. So that's the mix of using drivers, trends, Oracle's AI-driven auto predict, which is part of the IPM Insights, which is included with Oracle Cloud. But really, introducing concepts like initiative planning. So being able to separate your sort of baseline budget and forecasts for different parts of your business, but then really layering on business spending initiatives. So opening a new facility, winning a new client, those kinds of things. And we can help you set up your core planning app to have a great planning methodology that makes planning really effective within your organization. And then Oracle EPM Cloud really adds the technology component, which is the automation, so that when new actuals come in, your budget can refresh automatically. It can shoot you an email or a Slack alert or a Teams alert to say, hey, there's a variance that's been identified. Make sure someone goes and takes a look at it. And everyone expects these tools to be open 24/7 by 365. These tools are running in the cloud. Some old tools, 20 years ago, they might be shut down at night. These tools are open all the time, and your budget process should allow people to come in and, hey, what happens if we introduce a new product next month? You want to take advantage of that. And if you do this right, you'll have your team spending more time on the stuff that matters. What are the curve benders? What are the initiatives? What are the things that are going to move the business? And less time just forecasting out, business as usual. And this is all going to lead to better decision making and your team being more effective. I wrote, as I said in part one, I did write a book called The 9 Principles of Agile Planning, which just focuses on the methodology and some of the concepts that you should consider introducing into a modern budgeting and forecasting capability. So long-range planning, Oracle Cloud EPM has a wonderful tool for strategic modeling. This tool is really meant for the C-level or your strategy team to put a tool in someone's desk that is not Excel. And the purpose of it is really at a high level to have an integrated balance sheet, P&L balance sheet and cash flow statements that looks 5 or 10 years out in the future, allows you to model out macro decisions like, hey, what if we make an acquisition? What if we do divestiture? What if we change how we're organized from a financing perspective? Should we go public? Should we buy back stock? Should we issue a dividend? Should we borrow more, pay back debt? Looking at all those kinds of, how do we structure ourselves? You can lay that within the tool. And then it really gives you a capability to analyze major investments. What if we build a new factory? What if we build a new facility or a new campus? What if, those kinds of massive macro questions, the tool, strategic modeling is that tool for the C-level team to go in and actually lay some of these things in and within seconds get an update to say, yep, that's what it looks like. So it allows you to really, for the office CFO, to analyze strategic decisions, forecast your earnings per share out several years in the future based on different scenarios. And you can connect it into your bottoms up, core planning process that the organization is, running. But the trade-off here is we're really trying to take things up a much higher level and really prioritize speed in decision making. And it's really, people say, well, why shouldn't I use Excel versus this? And I like to say this is sort of in the middle. It gives you the structure of the tool, but the flexibility of Excel to look at these different business scenarios, but avoid, formula errors and things like that could really be a big impact to your organization. Labor forecasting is a funny one, and it really boils down to there's two paths in every organization, and it's really trying to understand what's your sort of fixed labor cost. So often, your corporate SG&A, your salaried, your exempt back office, sort of your traditional salaried people that as the business activity level fluctuates, your labor costs stay the same. And then on the other side of it is really the part of your business that moves with, the business activity levels. So your hourly non-exempt, revenue producing labor, and really putting in two different solutions often that deal with these different groups of costs within the organization. So as I started out, Oracle provides a turnkey module called Workforce as part of the Oracle EPM planning platform. Has pre-built integrations with Fusion HCM to pull out the employee roster. Now lets you forecast by person at the employee or position level. But what we find is for very large organizations that might have 50,000, 100,000, 150,000 employees, salaried employees, planning at sort of that employee position level can be very unwieldy and it ends up being a lot of work for financial analysts to reconcile the employee roster and say, hey, we're going to hire people, we're going to, make different decisions around our workforce. And so a lot of times we'll do a custom solution, which we'd like to call balance sheet style. And often we'll incorporate the open positions from recruiting. We might incorporate spend from payroll, bring it all together. And so the platform allows us to, support various models for fixed labor planning depending on your organization. Then on the variable side, the variable labor planning process often ties in with that margin planning process we spoke about. And these variable labor plans might differ, for different parts of your business that have different revenue models. And often they're tied to staffing. Hours, needed in different facilities by week or by day, different shift differentials, overtime, FTE requirements to meet regulatory needs. And a lot of times some of the drivers we'll see within these variable labor planning processes are maybe shipment lines or order lines, orders, patient hours, miles driven, things like that. So certainly a lot of different ways to take labor forecasting depending on the type of organization you are. Lastly, Oracle offers a module called strategic workforce planning. And we just like to point out this is not to be confused with workforce. Strategic workforce is really for the office of the CHRO function to look out 5 years in the future to say, hey, based on company growth plans, retirements, attrition, the different skills of the organization, what do we need to do from a macro perspective in the long term across our people? And so the platform includes, as part of your bundle, a tool for HR to do strategic workforce planning. If you'd like to learn more, I did recently write a blog on the workforce planning module, which you can find here on LinkedIn. All right, as you go deeper into the business, the data gets messier, but it also gets way more powerful. So as we started to say early in our session, okay, well, we've planned our P&L at a company level. We planned our labor expenses, which sort of cuts across the organization. Well, what can we do? So big expense areas. CapEx, Oracle's got a pre-built module for capital planning to help FP&A forecast changes to fixed assets. So if you're going to buy 1,000 laptops next year and lease some office space, Oracle's got a great module as part of the platform for that. We offer a custom solution if you have a decentralized capital programming process where you need to have people fill out capital request forms and have those get routed to different people. You can solve for that as well within the platform. Internal projects. So if you need a platform to collect, hey, next year we're going to do a training program. We're going to, replace the sprinklers, at these different facilities. We're going to, do X, Y, and Z on an expense side. Oracle includes a module called Oracle EPM Projects that allows you to plan the financial impact of internal projects. And here we're getting at sort of project, org, and expenditure, level of detail, which is, sometimes very important for organizations that, look at the world based from a project perspective. If you'd like to learn more, I have recently wrote a blog on the Oracle EPM Projects module that's on LinkedIn. We spoke a little bit on MarkX and IT. Again, if you're spending hundreds of millions of dollars on technology spend or marketing within your organization, you likely have a lot of people that are running spreadsheets on what different projects and things we should do internally. And so the Oracle EPM Cloud Platform can actually give your marketing account managers or your project managers within the IT organization a place where they can collaborate and say, this is what we think we're going to need to invest in, approve different investments, tie it into your procurement tools to monitor those investments, and put governance and controls around some of these really large spend areas. And then finally, we'll also see, your chief revenue officer often will need to do sales planning. How do I set quotas for my team? What do I think the sales funnel is going to look like for my key customers next year? How do I align my customers to my sales team, and so on? And so this is a new module provided by Oracle, really meant for the chief revenue officer to have a sandbox to do customer planning and really manage their sales team down to quotas and commissions. And finally, BU and operational planning. When you want to get into planning and forecasting the things that we do and the things that we sell, different areas of your business are going to need to plan gross margin. And I always like to say, when you start to bring in operational planners at your plants, on your sales teams, within your service organizations, it's really important to start to build these interactive planning use cases in their language, not FP&A's. So you do not want to be talking about accounts and cost centers and departments, but you want to be talking about our warehouses and sites and facilities and machines and items. And really, this is the intersection of operations with FP&A. FP&A is the consumer of this information, but FP&A benefits by really having operations working in the same technology platform as finance. And it just makes the collaboration and the exchange of information so much more efficient in your organization. And the Oracle EPM planning technology supports operational planning in a number of different ways. One is we have the capability to build custom planning solutions, which maintains the structure of the planning view, but lets us go deeper for the business unit. There's a capability called Freeform, which allows us to go really deep into a planning or reporting process, and we can really drive down into days, hours, items, parts. And then ultimately, Oracle has a new capability coming out soon called operational planning, which really allows us to connect very large data lakes and data stores directly into the operational margin planning process. And so there's a ton of capabilities here. Thank you for listening to our on From Cost to Clarity. And if you'd like to learn more, please reach out to infosolutions@alithia.com.
Hi, everyone. Thanks for joining back in the third part of a four-part webinar or a four-part discussion series where we're talking about cost to clarity. And in the previous three sessions that we've spoken about, we really did dive into some of the design and architectural paradigms that we wanted to talk about for Oracle EPM. We talked a little bit around the practical applications within modern planning and their use cases. And now we're going to dive into modern profitability and look at some of those practical discussions and practical applications for profitability and cost management within your world, and some of the use cases that we've seen and how they connect to planning. So let's start off at the ground level. When we talk about profitability solution, what do we think of? And sometimes it helps us to start with, well, what isn't it? And certainly when we talk about profitability or allocation solutions, it isn't about creating once-off solutions. So when we talk about it and when we look into it, we don't just want to create just another allocation. It's not just a once-off thing. When we're talking around a solution, a profitability or allocation solution, it's not just about having a once-off allocation where you're allocating something in a very, very simple manner. It's not Excel black boxes. Everything within finance, we know it starts off in Excel. Excel's great. It's incredibly flexible, provides us with a lot of benefits, but it gets old really quickly, especially as we start to grow, as we start to want to change things, as our organization needs to adapt to our new environment. Excel becomes really difficult to manage, and it just creates these horrible black boxes when we talk about it. And then very importantly, we don't want retroactive reporting. Of course, our profitability and allocation solutions take in data that was already, of course, executed or, of course, recorded. But we also want to say, great, well, let's look at the data that we've allocated out in the past, and let's do some scenario modeling around. Let's do some what-if scenario, what-if-based modeling. And let's try to be proactive rather than only ever being reactive with our decisions. We want our allocation solutions, wherever possible, to be providing us with actionable insights. And to do that, we need to be able to do that scenario and that proactive reporting. Well, so what is it when we talk about it now? What is actually allocations in the sense that we're talking about it within Oracle EPCM? And really, when we think about modern profitability and what it should be, we really want to think about it in terms of it being holistic. We want to be able to have end-to-end visibility. So if we're going to have allocations that are going to drive our decisions, that create actionable insights, they need to have end-to-end visibility. If I'm creating a shared service costing model and I'm charging out between my different departments, I need to be able to defend those charges. If I'm doing operational transfer pricing, I need to be able to tell why that end-to-end visibility or those charges, I need to have that end-to-end visibility and provide that to auditors or to my stakeholders. Having that end-to-end visibility is so important when we talk about that. And this is kind of why Excel, for example, isn't a good fit, because no one wants to do 10,000 VLOOKUPs. Now, of course, we want operational alignment. We need to bring in data that is aligned or from our operational sources to drive out our allocations in meaningful ways. We don't want to take guesses. We don't want to do it at a level that is not meaningful to us. So bringing in data that aligns to our operational environments is important. We want dynamic driver-based modeling. So this is also really important for us. We want to be able to bring in the drivers that drive out our allocations in a way that is meaningful, but we also want to be able to have models where we can change the drivers if our situation changes, if our economy changes, if our business changes. We want to be able to have allocations that are driver-driven, of course, but we also want to make sure that we can change our drivers as necessary and do that what if modeling that I spoke about a little earlier. We, of course, want to have an integrated planning and execution approach. They've got to talk together. We can, of course, do our allocations for actuals, but we also want to have allocations for planning. And we want to make sure that the allocations we're executing for both actuals and planning, or for plan, are aligned. So we're using the same methodology for both, and we're doing that in a meaningful way so that we can line up and we can say, great, well, what did we plan versus what was our actual execution? And then, of course, we want them to be accountable and we want them to be meaningful. So very, very important. We don't want to execute allocations for the sake of executing allocations. We want them to be meaningful. We want them to be purposeful. But we also want to make sure that we hold people to accountable for them as well. We want to make sure that there is someone saying, great, well, if I'm driving out allocations in a certain way, I can hold people accountable to the output of those allocations. It kind of comes back into a visibility discussion as well. If I don't have end-to-end visibility, it's very difficult to apply accountability because people will just say, well, I don't know what's happening. I didn't sign off on these allocations. I can't prove that they're correct. It's very hard to hold people accountable when you don't have that end-to-end visibility. And of course, it's all about strategic enablement, actionable insights, right? As we often say in our profitability world, we really want to have allocations that help us to drive our organization going forward. It comes back to that retroactive versus proactive view of the world. We want our allocations to provide us a retroactive view in terms of what happened, but that only is valuable to us if we're able to allow or to enable strategic decisions in such a way that is meaningful. And of course, helps our organization to not only survive times that are tough, but we want it to grow and we want it to prosper as well. Now we've got to tie this all together in like allocation solutions, and within any allocation solution or well-built allocation solution, we want to enable governance. If things changed, we want to know who changed them, why they changed them, for example. We, of course, want to provide those audit trails. And of course, we want automation. We don't want to have a million different little steps in between. We don't want to have users having to interact and update a rule every single, multiple rules, every single allocation cycle. We want it to be as flexible, as dynamic as possible. And we also want it to be automated in such a way that it makes your end users' lives easier, or your power users' lives easier, not harder. So let's talk a little bit around our use cases. And we're going to come back to this slide that Dave kind of showed in the beginning. And the ones that we're going to focus on today, we'll focus on three primarily, but first we're going to talk about your BU and segment allocations. This is really a fully allocated P&L down to BU and a segment level. Then we'll talk about your product allocations. And these are both very good examples of allocations that fit within both your actuals, of course, but also fit within your planning world as well. And let's first talk about your BU or segment profitability. So what is that? Well, typically we'll take in data if we're looking at it from an actuals world. We'll take in data from your general ledger if we're talking about it from being connected to planning. We'll bring in the planning data from your planning applications. We'll bring in your pre-allocated expenses. Those pre-allocated expenses are your direct expenses by BU and segments, and they're expenses that aren't direct or aren't recorded by BUs in segments, such as your overheads or your group services. And we'll bring in, for example, pre-allocated revenue quite often as well, because we can't do profitability without expenses and revenue. So those are our two kind of starting points. Of course, we'll bring in our drivers as well. And the drivers can come from various places. Of course, if you're bringing them in from a planning perspective, we'll often bring your drivers in from your planning application. For actuals, we'll bring them in from your various subledgers. We may bring them in from your operational databases as well if required. And of course, we can have your manual user input as well. Manual user inputs, typical things like time surveys, those kind of things that we use for activity-based costing. Those are all examples of drivers that we can use for these type of allocations. And we take those two data sources, our pre-allocated expenses and revenue, and our driver data, and we use that to allocate out our overheads and our group services that are not by BU. We'll allocate those out to a BU and segment level in order to get a fully allocated P&L, which gives us the ability to do true profitability by BU and by segment. And really why this is valuable to us is because our statutory P&L really doesn't give us the information that we need. It doesn't help us to answer some really key questions, like which of our business units is driving the most profit when we look at everything being allocated. Which one of our business units, what are our business units' true cost structures? What is the proportion of shared services or corporate costs does each BU consume? How does our overhead of shared services allocations impact my segment level results? And what would profitability look like under different operating models of cost allocations? And to answer those questions, I really do have to bring in and allocate out my overhead and my shared services down to that BU and segment level, because I can't get there if I'm just grouping those overheads and those shared services and not allocating them out. So does add that FP&A the ability to answer those questions and provide meaningful insights to our leadership. So just another kind of different view of what I had explained. Now, if we look at it more from a spreadsheet perspective, we look at it on a pre-allocated side. You can see on the left-hand side of that table there, we have your BUA, B, and C. We can see the direct revenue. We can see the direct costs. That gives us our gross margin for each of the BUs. But when I look at that, when I look at my operating income for each, I only see those direct costs and those direct revenues. There's nothing at the BU level that helps me to understand the allocations of IT shared services or HR and finance or facility and utilities, for example, down to the BU level. Once I've run that through PCM though, once I've done my allocations and I've picked up those different shared services and overhead costs and allocated them out through meaningful drivers, and now can get to a really true operating income view by each business unit, for example. And when we start to look at this view, you can see my base assumption might have been that great, when I look at each of my operating divisions, it looks like I've got a really good profitability across all of them. And I do have them when I look at my pre-allocated side. I can see I have 17 million of operating income from BUA, 21 million for BUB, and 30 million for BUC. However, when I allocate it out on my fully allocated P&L level, I can see that my first two divisions, specifically A and B, are actually consuming quite a lot of expenses relative to their revenue, and that's going to drive down their overall profitability. So now I can, of course, make a decision based on that, and I can, of course, say, great, how do I want to make sure that I have the most efficient operating model that I can? And where is there possibilities to reduce costs in a meaningful way, or of course to increase revenue in a meaningful way as well. It's all about the empowerment of the leadership to make strategic decisions that empower our organization to grow and achieve. Now, of course, that one that we were talking about now, the B and segment level, that's a very internal facing view of the world, how we make our organization more efficient from that. What about more out-facing views of profitability, for example, by product or by customer? And of course, this is the more traditional use case when we think about profitability and cost management. And it is valuable still to think about that level. So same sort of approach. We bring in our pre-allocated expenses from planning or from our general ledger. We bring in our pre-allocated expenses and our direct expenses by customer or product. But we know that we also have a large amount of indirect expenses that aren't recorded by customer or by product. Of course, we also bring in our pre-allocated revenue. Typically, revenue is most part recorded by customer or product. Of course, we also may have revenue that is not recorded by customer or product that needs to be allocated out. Now, when we look at our drivers, again, we can bring in drivers from multiple different places in order to get our product and customer profitability. We may bring in our standard core rates or standard expenses from a standard costing tool or SCM, for example. We may bring in operational drivers from our data marts or our data warehouses that we have, or our data pools that we have. And of course, we can still utilize manual inputs within PCM to help drive out our profitability. Now, once we've got in our driver data, once we've got our pre-allocated expenses and revenue, we can then allocate out those indirect expenses to our customers and products, and even our indirect revenue to our customers and products to really get that fully allocated view into which products and which customers are truly profitable for us and which ones potentially aren't. And that, of course, is important because we can even drive certain things and look at once we've got it down to a product or customer level, we can even add attributes onto those customers or products, such as regions, for example. And we can even look at things at additional attribute levels to decide, great, well, what regions are profitable, for example? Are there regions that maybe I shouldn't be servicing because when I look at the fully allocated view of the world, they're just not profitable? So that for us creates a lot of value again. It helps us to drive the strategic decisions. And again, when we look at this from a more practical perspective, your statutory P&Ls just don't give you enough answers in order to make truly valuable strategic decisions. So for example, what defines a profitable customer when you fully allocate out? Are your customers truly profitable, your products? What is your profit contribution margin of a specific product or service or customer group? What does it cost to sell to a service to customers? I can look at my direct expenses, but when I look at fully allocated P&Ls by a customer, I make it a very different view of the world. What proportion of resources does a specific customer consume? Do I have a customer who consumes an extremely high amount of indirect expenses through support functions, for example? Why has my profit not increased even though my revenue has? Do I have an underlying cost issue where my costs are increasing, but my revenues aren't increasing with that? And to answer those questions, we need to bring in our operations indirect expenses. We need to bring in direct expenses such as marketing, such as sales, such as all those functions that help us to support our clients or our services or our products, but don't directly have any kind of direct cost associated with them. So we need to drive out those costs based on our operational drivers or the appropriate driver in order to get a meaningful view of our true profitability by customer or by product. And what that allows us to do is to really break it down into a meaningful way. And we can start kind of looking at that almost as an above the line versus a below the line contribution by product, by service, by customer. And that gives us the ability to drive out our decisions. Of course, if we don't drive out those profitability, or if we don't do our allocations down to that product or customer level, as we saw on the last slide, we don't get a full view of the world. We're only looking really at our direct expenses and direct revenues for a customer or product level, and that doesn't give us the answers we need. And if we look at that more from a traditional P&L kind of view of the world, you can see that on a pre-allocation perspective or pre-allocation view of the world, I can see the above the line margin. So I can see in this case, my total product margin, contribution margin was 520,651. When I look at it at a individual department level or individual product level, I can see the breakup for the above the line expenses. And that's okay. That may be sufficient. But for me to get really meaningful in making decisions, I need to be able to look at the level of granularity down to see the below the line margin as well. And when I look at that view of the world, you can see things change a little. You can see that, for example, I've allocated my overheads out by product or by department. Sorry, by department, by product. And when I start doing that, I can get some answers down, and something that may have seen to be very profitable may not see all that profitable. I may get to those underlying causes of why a product is not profitable or a client is not profitable. Or I might be able to say, great, well, maybe we should start servicing a certain group of products because they don't give us the value and servicing that we need to. Of course, we also get clients that we know are potentially loss leaders and maybe not generating profits, but they are strategic to our organization. And this helps us to really understand how much we're losing on each client relative to their strategic value in those kind of cases. So these are just two of those examples that we use or that we see in a lot of clients, specifically in relation to connected planning. But of course, there's a lot others. We have, for example, your standard rates costing, which we haven't spoken about here in too much detail. We've got your operational transfer pricing and your intercompany billing, which we haven't spoken about too much here as well. But there are other valid use cases that we have for EPCM. And if you didn't see one that really piqued your interest today, feel free to reach out to us. We're always happy to have that discussion and to show you all the other things that PCM and Oracle Profitability and Cost Management can do. But with that, that ends the third part of our webinar for today, or our webinar series for today. So I hope everyone enjoyed it, and feel free to reach out to myself or to David if you've got questions, but we'll see you in the final installment in just a bit.
Welcome back to our four-part webinar series on From Cost to Clarity. Look at how Oracle Cloud Enterprise Performance Management Planning and Profitability and Cost Management work together. In our final wrap-up section here, we're going to pull it all together and give you our closing thoughts on how you can be successful using these tools to solve use cases within your business. In part one, we had mentioned you can do so much with the Oracle EPM Cloud technology, and the way Oracle licenses it is almost like an all-you-can-eat buffet. All of the capabilities and things that Andrew and I spoke about today, you could do. And the question we often face is, well, where do I start? And you have to start somewhere, but you can't do everything all at once. And so knowing that, really we see two major approaches on how people take on, using these modern tools. And often we'll see people sort of start inside out. And I would say 80% of our clients probably start on the inside out, where a CFO or a VP of FP&A says, I really need to get my own house in order on how we consolidate and publish budgets, forecasts, and actuals within the finance organization, and then extend it out to help other parts of the business, whether that's marketing or technology or operations. So often we say, hey, they start close to home and work from the corporate view out to other parts of the business. And often we'll sort of call this, if a CFO or a leader in finance says, hey, we want to rethink how we do it, this is really where we'll start. The other sort of way that happens 20 or 30% of the time is when one of those business teams in operations or marketing or technology or programming says, hey, we need to fix like our business regardless of how corporate is looking at things. And often we need to solve a problem and get better visibility into our profitability by customer or by product or by service, or we need to get control and governance around our spend in a high spend part of the business. So I would say probably 1 out of 5 times, it's sort of an outside in fix a problem approach. And both are valid, and we'd certainly be welcome to talk to you and hear where are you at and what problems you're trying to solve, and work together to figure out, what's the right approach for you.
Great. So regardless of the approach that you choose, really what we see and what we advise clients is roll it out in phases. There is a certain amount of dependency of the different applications that we have. So if you saw me speak about profitability and cost management, sourcing data from planning, obviously there has to be something in planning for me to pull, for me to do that. Now we do have clients where they want to do everything at once, and we've definitely got strategies to deal with that. But you don't have to have a big bang approach. You certainly can roll this out in phases in order to make sure that your foundations are solid and correct, and then go into your phase 2. What is important though is having that big picture view up front. So knowing where you're going, having that envision phases really is important. You don't, even though you're going to roll this out, or you would potentially roll this out in phases, you don't want to have a situation where you're just making things up as you go. You want to have that big upfront vision. You want to have that architecture to make sure that you can understand how everything is going to fit together. And sure enough, things may shift and may change as you go through your implementation, but you've got to have that direction up front in terms of knowing where you want to be in order to get there in a way that is correct. Now, very important, make sure your dimensions, your granularity, what you want to get out of the system is defined up front. That is obviously critical in our EPM world. We want to really be able to set our data models so that they can support what you need to have today, to need to get out of your systems today, the planning, granularity, as well as the profitability and allocations, analytics ability that you want out of the system. We want to be able to service your immediate need, but also, again, think about the future. Think about where you want to go with it in order to build up your dimensional model, your data models, in such a way that they provide you the ability to be flexible and scalable within the future. And of course, we haven't really spoken a bit about it too much today, but enterprise data management is a tool that I certainly love, and I think I speak for a lot of our consultants that EDM makes our lives easier. It makes us have the ability to have a controlled, standardized set of data with dimension data within our world, but it allows us to take a standardized that source of truth and then apply different perspectives to it for our different applications that we have within our world. So that's very important. If I'm sourcing data from my general ledger, if I'm sourcing data from planning, I want to be able to have any kind of shared structures, any shared dimensionality managed in EDM. And then, of course, I can add additional elements that are PCM or planning specific. I can add those into those different perspectives that we see. So I'm a huge fan of EDM. I think it does a fantastic job at managing that. And of course, it's not just EPM focused, it's much broader, but it is a tool set that we love to see at our different clients. Great. And then the last point as we kind of close off is the Oracle EPM platform really is built as separate applications, but they talk and work together. They really are the focus of saying, great, we're going to give you the right tool for the job, rather than having you trying to force allocations into planning, or even worse, trying to force your planning process into PCM. We're going to give you the right tool for the job. And then, of course, we're going to make sure that they talk together, like they act together, like they're one application in one world. And that's really what the Oracle Enterprise EPM system is all about. It is about having that right tool for the job, but making it seem seamless in a way that they're acting together. And we can use things like navigation flows to really have one landing area that allows you to interact with the different modules in such a way that you feel like you're in one application. We can move data between the different applications using data map and data exchange in a way that makes it seem seamless, like you're acting within one application. And I spoke a little bit before around EDM and how that allows us to keep our metadata organized and synchronized across our different applications. But of course, like everything, we also just want to have one place for reporting. I don't potentially want to be able to have to log in to 3 different applications to be able to do my reporting. And narrative reporting allows us to do that. Narrative reporting sits above all the applications or the business processes, and it allows us to connect to those different business processes, such as planning, such as PCM, such as FCC, and it allows us to pull data into that single reporting layer for us to be able to report across the board, and allows us to create, again, that seamless experience for our end users while still providing the leading practices and leading experience on the functionality side of it as well. Great. Well, from me, that ends our series. I hope that you enjoyed it, and I hope you gained a lot of value from David and myself. Feel free to reach out to us, to chat to us. As David mentioned, we're on LinkedIn, and I'll get Dave a chance to talk and say goodbye as well. But feel free to reach out to me on LinkedIn. Feel free to reach out to me on email, and I hope to be hearing from you soon with any questions.
Thank you for everyone's time today. Again, you can contact me at davidpaps@alithia.com, or more generally, please reach out to infosolutions@alithia.com. Thanks again.